Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, friends. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 24th of May. And we are now pushing at 2:55 p.m. Central Daylight Time. In the gold, you're seeing the market up $1.60. Silver is up. Let me tell you the settlement price of the gold, $12.53.10 in the June. Remember, you settle the market, which means a closing settlement price, even though the market's not closed, just called a settlement as they call it, at $12.53, but you trade until 4 p.m. Central Daylight Time. What happened is the FOMC minutes came out, and when they came out, if you looked at them, there is cause of concern. The economy's not firing on all the cylinders the Fed might want it to do. There's talk about wage inflation not being as good as they thought. There's concern that in April we saw some of the core indicators fall down and not meet the inflation targets. They'll say that's transitory, but some of the members are questioning what to do. So while the marketplace is still pricing in a June hike, further back that you go, there's going to be questions about this. Those questions put a bid right into the bonds and the notes, which have come back nicely off the day's lows. The stock indices, which were flirting with mostly being down, have come up and gone right up to the highs of the day, with the Dow just hitting the last high of 20,995, going back to it. Now the question is, can it get over 21,010? And most of these markets have wiped out the losses that you saw, including the NASDAQ, off the Brazilian situation. So the stock market is still getting good bids, and suddenly those bids have come into the metals and an offer into the U.S. dollar. So the FOMC minutes, in a nutshell, kicked the metal markets higher. Copper's hurting because China saw its credit rating downgraded by Moody's, and Moody's is saying that long-term China's going to have real problems with debt and maintaining any type of growth near the current numbers that they're getting as their economy gets bigger. In the weekly gold chart, I still see bullishness. I see the market having higher lows, higher highs, being over the 18-week moving average of closes, which is this red line. The green is the 100-week. When we get to an area chart of closes, you're at 1257.10, but remember, I told you you're going to close at 1253.10. You're not going to be up and over these numbers, but you're in an upthrust because you've gone from 1216.10 to a high of 1261.40 on a closing basis. When we look at the current chart, please understand this market's going to close down at the 1253.10 level, $4 lower, so it's going to be lower on the day. That's very important to understand right here. It won't impact what the swing line's doing temporarily. The market has still got the pattern of these highs to deal with, lower highs but higher lows. That's very important, and so far you haven't taken out 1246.10. I'm going to view this as a successful test of some key moving averages, being the 200-day moving average of closes. How many days have you been watching in a row where I've said, watch your battleground? It's right here. I'll tell you what could get the trade really excited, taking out 1263.80. It could then say that, hey, higher lows, a new high, a breakout high for that, could carry this market to even higher levels. The Bollinger top, the first resistance, would be 1271.70. So I don't know how far you'd carry, but that's still $8 if it did all that. And I think the trade likes what it's seeing there, but you are in an overbought condition. Now I want to repeat what's going on here. The 18-day and the 100-day average are also starting to kiss each other. They're only about $5 apart. The question is, does it turn up, or does this average turn down if prices fall back? That's what we're waiting to see in part. When we look at the ETF GLD, the pattern is one of higher lows so far, higher highs. You're bullish. To really negate this attempt at a break in the market, you take out yesterday's highs of an outside day down, I think that then you're looking at the potential, a strong one, to get back to that upper Bollinger Band in this market. The gold miners even sunk lower today, hitting its 18-day average of closes. It remains in an overbought condition. It has lower swing lines of lower highs, lower lows, but because it's staying over the 18-day average, everything negates itself, and you've got what's called a mishmash here. There's no real trending in the market. The gold-silver ratio is trying to improve further. With the lower the number goes, the stronger silver is relative to gold, and that seems to be the picture that we're seeing right now. And in the silver market, you can see that you've got a pattern of higher lows, you got higher highs, you've hit the upper Bollinger Band, or attempted to yesterday, now you're making another run, you might get there. You broke it one time today to 1689.5 and held very well. But there is a common theme, and the theme is that this market is overbought, the ETFs for gold are overbought, and the futures are overbought. So everything's in an overbought status, with none yet attempting to convert into what we call locked-in bullish status up in betting. And while the copper market is down, it's actually held up pretty well considering the beating that some thought it got this morning and took it down to 255.55. It since came back. That number was made when Moody's downgraded China's debt rating. It drove the market towards the 18-day average, didn't quite hit it, missed it by 40 points. It is overbought, it is not trending, it has layers of upper resistance between the upper Bollinger Band and the 100-day average, let's call it 263.75, and the support at 255.15. In the platinum market, the market is number one overbought. It is trending. It has the higher lows, higher highs. It got up yesterday, hit its upper Bollinger Band, backed off today, and it's coming back. But remember, all of these markets closed. Their settlement price has already occurred over 2 hours ago, so most closed lower than what you're seeing. I am surprised that the Palladium couldn't muster up more strength for the 18-day average, but not surprised that when it took out the outside day downs high, right here, this day's high, that you go to the closest of the major moving averages as I teach it, and that number was 775.30 at the close that day, 776.35 the next day, and it hit 776.80, and now it's backing off. Market's just not acting bullish in any manner. The dollar index is still trying to develop a bearish embedded reading. It's going to get it. Number two, it's going to try to set up lower highs, lower lows away from the Bollinger Band. There is nothing friendly on this dollar chart. And for the first time, I'm starting to read certain press articles that have acknowledged that the dollar is down for the year, it's staying down, and it's doing certain things with our trade balances and the like, which are not the worst things in the world for what the Trump administration wants. So hooray for that. You know, I teach everything you're seeing here and more. You don't see window envelopes. You don't see some of my secrets that I give in trading. I use 5 indicators in my charting course. They're obviously moving averages, the swing line, window envelopes, slow stochastics, and there's one more that Bollinger Bands. And I teach you all the secrets I know about them. Now, it's all videos. So you sit down, you see what I do, you get charting software with all the data, you go back, you do the same thing on the charts, it's rote. You start learning all about it. Everything starts off first with the simple PowerPoint, then I take you to charts and I cover the name of the chart. I don't want you to have an idea, is this market going up or down? That's the purpose. Then I reinforce it because in the mornings at 8:30 a.m., I record typically every day of the week a subscriber video. In it, I'm going to review the Bollinger Bands, the swing lines. We're going to show the importance, what they're going on today's chart. So the video is going to take you back in time, and your chart data will go there so you learn. Then you're coming forward with it. Pretty interesting stuff. How you learn more is you can call my staff, but if you go to our website at www.iraepstein.com, go under the word education. The course is $99.95. With it, you get $100 worth of charting software, so you get 30 days worth of that. You're going to get 30 days of my research, access to everything I'm talking about here. That's a $60 value. The whole course is but $99.95, so the values just add up. And here's the promise. the price of the course is going up again. I used to sell this course for, at one point, a course similar to it in the hundreds of dollars. I've redone the course over the years completely, so it doesn't look like it used to, and it teaches much more each time that I do this. In addition, I'm now building technical libraries. I'm doing pivot points, MACD lines. You want to get first the course, then you want to build on that with some of these other tools that can nicely fit in with it. If you're watching me on YouTube, just click on the icon you see up here. It'll take you right to that page. Otherwise, you see how to do this. Take advantage of it. It's summertime. Why not learn a way to trade? I'm Ira Epstein. You have a great day.